Welcome back to part 2. In this part we're going to touch more on current homeowners and look at the role brokers play in the specialist lending space. So just a reminder that I'm joined by David Coleman, Head of Sales at Positive Lending, and Oliver Smith, National Account Manager at Vida Homeloans. Okay, so I want to get straight into question 1. In part 1, we talked more about first-time buyers, getting them on the property ladder. I want to now talk more around the home mover. So, are you seeing any increase, Ollie, in people that are looking to move and maybe just feel that it's just not possible?
Yeah, I think you're definitely seeing a lot more of that going on in the market. I think looking at property prices, they're all going up, so it's good that your property has gone up in value and you've got increased equity. However, you're then buying another property which has gone up in value, so you're still facing the same problem there. So there is definitely a barrier there, and I think it's all around the cost of property and income against it, essentially, and affordability.
Okay, cool. David?
Yeah, I mean, we're seeing there's still a desire, I think, to upscale and get a bigger property. We are seeing there's more consideration around that now, whether that's possible on an affordability basis or whether actually the client wants to pay for the uplift of that property, because cost of living makes it more expensive to run the property. There's also stamp duty, and that's leading into us seeing more second charge activity, simply the improve rather than move, with the view that if they add value to the property, they can sell it and then potentially get what they want off the back end.
Okay, so I'll just build on the second charge piece then. So we are seeing then an increase in that part of the market across all of it?
Yeah, so I mean, as a business, we've never been busy with inquiries coming in on that. I mean, there's loads of different factors around that. It's the loan purpose, it's the affordability, it's the USPs that maybe a traditional further advance or remortgage doesn't allow for, or potentially a first charge doesn't provide the best outcome. And I think whilst that allows the client to achieve actually what they want, the second charge market will continue to grow off the back of it.
Okay. Ollie, what?
Yeah, I mean, it's not an area that we play in, but certainly being part of it previously, it's definitely an area which all advisors should be exploring. It's an area which is growing, and it's an opportunity for the end consumer to get what they're looking for if they're getting a no by way of the first charge. So absolutely lean on positive lending and other packages to help support within that second charge area if need be.
Okay, cool. So going back to the home movers piece, is there a particular thing that you're seeing is causing the barriers? So I know you've mentioned some things, but is it credit related? Is it affordability? Is it all of the above? I mean, what are we seeing?
All of the above, I would say. Yeah, I mean, there's sadly more adverse creeping into the market. That doesn't necessarily mean heavy. It's late payments, missed payments. Actually, what we are seeing probably more of the home movers is downsizing, because people are going, actually, I've got this property. It's becoming unrealistic to manage it, and do we need the size of this property? Maybe they're moving further afield to a desired area, location, forever home, end destination, etc. So we're seeing more of that kind of stuff come through.
Okay.
Yeah, very similar. I would say naturally in the space that we are in, we do see a lot more of the credit impaired side of it. Equally, when you're looking at income expenditure and affordability, a lot of that comes into play. It could well be that you've got somebody who's recently self-employed and they've only got 1 year's trading, but actually their business isn't running to the volumes they need yet. So they've taken on a second job and they may have only been doing it for 5-6 months, but you then need a lender who can look at all of those. So I mean, they're things that we can consider, but that's where it's going down the specialist route of where can we help these clients, and affordability and also credit impairments is definitely a barrier there.
Okay, so I think we talked about it a little bit in part 1, but do we think, so barriers there, or obstacles we'll call them, because you will hopefully allow us to get around them. But do you think that the appetite to move now is more than maybe we saw, 6 months ago?
I think the desire is still there. I just don't know how realistic it is for a lot of consumers out there at the moment, because of the cost of everything that comes with it. Hence why we've seen, I mean, last year was a good example of that. With everything else that was going on, there was still a good percentage of applications coming through on second charge to improve. So people that wanted to spend in 80, 100, 150 grand on uplifting their property, with the view that if they could uplift the value of the property, they can either sell further down the line when the time is right, or they can refinance onto a better mortgage because they can get a better deal because they've increased the value of the property. So I think there's still a desire to do it. It's just a case of whether that actually stacks up, and people can do it. And also there's a lack of housing stock as well. So people finding the property they actually want to get as opposed to being what they can actually get is probably the decider.
Okay, that links perfectly into my next bit, which is around property type. So are you seeing people looking maybe at different types of property, not just the standard your semis, your detached? What's going on there in the market with the buyers?
Yeah, definitely. I think, you're seeing a lot more people entertain properties where they previously haven't, whether that's going to be their own residential home for them and their family to live in, or whether it's going to be a buy-to-let. You're seeing a lot more people entertain properties which are above commercial premises or close proximity to a pub or petrol station, which, going back into what we discussed in part one, a high street probably wouldn't really have an appetite in lending against those sort of properties, but specialist lenders most certainly would. You may well see a bit of short-term finance be taken out to purchase properties like that and then refinance to a specialist lender. Certainly we don't mind refinancing from day one off of a short-term finance. So you are seeing more of those situations arise, which are normally due to the type of property.
Okay. David?
Yeah, so we're seeing a lot more bridging finance being used for clients who want to downsize. Okay. So they're finding a property, maybe they need to be a cash buyer effectively, their property might not even be on the market, or it is on the market and it's just not selling quickly enough at the moment. But they want to do work to the property before they move into it, so we're seeing more of that stuff. Again, in the investment side of things, actually we're seeing more commercial inquiries come through because the buy-to-let landlords now are going, actually the buy-to-let market is a lot tougher, I'm going to invest in commercial. And they're potentially using short-term finance to acquire, or they might be just acquiring by a term commercial product, but there's definitely more variation coming through now.
Okay, cool. So we talked positively, I feel, in part one and so far in part two, but unfortunately the reality of the market that we've been in, the costs, has made it difficult for a lot of people. And recent stats we've seen in the mortgage arrears increase, which is obviously not a great thing at all. What is the specialist lending market doing to try and support these people who are getting into difficulty with the SVR going up so much?
Yeah, well, look, I think I'll let Ollie talk about the first charge side of stuff because he's in that arena. But in the second charge, if you look at that now, we're seeing more clients come across where they're credit impaired, whether that's late or missed payments, CCJs, defaults, they might have a DMP running. Without a doubt, we'll probably see more IVAs in the market. I spend a lot of time in the car. Every second advert is take an IVA and wipe off your debt. Now we know that a lot of those clients will enter that in not knowing the full circumstances and understanding how long that will actually affect them going forward. But we're seeing more second charge being used because actually if they were to refinance away from their more mainstream lender at the moment, it's probably going to hurt onto a more specialist rate. So second charge is being used to capital raise until the adverse is historic enough. But then of course you've got the clients that want to maybe get onto the property ladder or don't have the option, they need to refinance because their product's up or whatever the scenario is. And then it's people like your Vidas and other specialist lenders who will come into the market to support those kind of clients.
Okay.
Yeah, I think sadly we are seeing more people fall into this situation. I think the stat that I read previously was around Citizens Advice Bureau. They took over 1,000 debt inquiries a day back in 2023. So more and more people are seeking out for help around their debt, but unfortunately something falls down. It's the old spinning plate analogy. You've got your property spinning on one plate, you've got your utility bill spinning on the next, feeding your family on the next, paying your car so you can actually get to work on the next. Unfortunately, sometimes one of those might fall, and that is being reflected by way of CCJs. If you're looking at quarter four for last year, it was on averaging that you were getting around 2,500 CCJs registered a day, which is up about 16% on quarter four 2022. So unfortunately, we are seeing more and more people falling into this space, but that is where lenders like ourselves can help and others in this space, whether that's going to be a bankruptcy, an IVA, it could be a small missed payment, or actually it could just be that your client has got a high debt to income ratio, and that is enough to put you in a specialist bracket at the moment sometimes.
Okay, all right, cool. So it's clear from everything that we've talked about that brokers are massively important in this
More
space.
so than ever.
Absolutely.
More so than ever. Took the words out of my mouth. So how important, as you said, more so than ever, how important are the brokers out there, Dave?
Without a doubt. I mean, every client that speaks to a broker is now getting more rounded advice and more access to what the market is, and that's where we come in as specialists to provide those brokers with all the tools they need in their toolbox to support those clients. But every broker I go and see, there is no such thing as a straightforward application. Now, even if it's high street, there's no such thing as a straightforward application. So as the world continues to throw curveballs at us, and the cost of living and affordability and debt and adverse and whatever it may be, there's going to be more stuff that typically, even if your broker has a vanilla back book, more clients that will fall into the impaired credit or affordability or whatever it may be, that lends itself to specialist lending options on whatever basis that may be.
Cool. Ollie?
I couldn't echo it any further, to be honest. I think it is now imperative to be speaking to a broker more than ever. I think clients may have one vision in their mind of what they want to do, but actually by the time they've walked out of a meeting with a broker, the doors will open in terms of you've now got option A, B, C and D, for example. So absolutely speak to a broker and they can explore every single option which is available to you.
And I think that is the thing. A consumer will pick up the phone to a broker or speak to someone and say, I want £50,000. Can I get it? And they just think, I'll just do a remortgage or I'll get a further advance, wherever it may be. A lot of the time that won't work. And that's where the broker comes in, and that's the value of a broker. Go, well, actually, it's not going to work this way, or it's not going to provide the best outcome, but we can explore these options for you. And that's where the likes of specialist lenders come in to support those kind of clients.
So do you think there's still a lot of clients out there that probably could do something that maybe believe they can?
Yes, 100%. I think if you're a client and you've run up some debt, maybe a lot of debt, probably quite conscious about discussing that, but a mortgage broker will be able to go through that and let them know. If clients are tied into a fixed rate product, that might have been discussed with the broker day one, and they might think, I can't do anything for the next 5 years. Well, they can. A broker's going to be able to guide that client and let them know what they can actually do and help them out of the situation. What I've seen definitely from visiting brokers is that they're having more proactive conversations now ahead of the product end term, but maybe even 12 months ahead of review, simply to discuss what's going on. Have you got debt you need to consolidate? Is that affecting you? Has there been a life change? Has there been a bereavement? Has there been a split in the family? Is there what's going on? All of these things that might mean the client's in a bit of a sticky situation, unaware that they can actually do anything, but the broker says there is an option here for you.
Also, clearly client reviews are going to be imperative.
Without
absolutely,
doubt.
yeah, absolutely. I mean, look, most initial conversations are absolutely free of charge. So if you're not having that conversation with an advisor, absolutely have that conversation, because that will give you the ability to know whether it's a pipe dream or whether it's a reality. And then yes, absolutely be on top of your client retention and reaching out. Most certainly.
Cool, fantastic. Well, thank you both for joining me today. So that brings to a close this episode. It's clear that specialist lending is going to be a vital part of the lending landscape as we move through 2024, and that broker knowledge and understanding of the market is key to ensure that we help as many customers as possible with the dream of owning their own home as well as moving home. I hope you've enjoyed it, and I look forward to seeing you all soon.